Welcome to Business FM. We're broadcasting from our radio studio at FMR 101.3 FM at the Artscape Theatre in Cape Town. And looking back at the week that's almost concluded is Jeleze Hattingh from Element Investment Managers and also Joanne Baynham from Mitan, Optima. You've got to be on form tonight, both of you, because there's nothing happening. There's nothing happening, Joanne. I mean, no big events. You're not looking forward to any big events. No Janet Yellen's, no major economic data.
Is that what drives markets these days?
She's been a big event for the last 3 years.
I know, she is the event. What's happening? I think suddenly there's been a sea change, actually, and two factors, and I don't know which one's more important, but the dollar has stopped appreciating.
Yeah.
I think that's quite a big move in markets.
You see, you're focusing on something, sorry to interrupt, but I have to say you're focusing on really tiny events here.
No, this is not a tiny event. This is a massive event.
It went to 114, it's back at 112.60. It's
comparing it to euro dollar, if you do look at the dollar index and not just dollar euro, it's down sort of 6 to 8% year to date, it's down. And at the same time, we've seen emerging markets come back. So there is something that's going on in markets underneath the surface. Something interesting is happening. If you've been long emerging markets this year, you've made money for clients. You've beaten the S&P for the first time in quite a while. Would you agree with that?
No,
and we've had a commodity rally at the same time.
But it's actually, if you think about the markets that are up this year, you're looking at Russia, South Africa, Brazil, Turkey. None of these four actually have got awesome fundamentals. South Africa's GDP forecasts are continuing to be downgraded. Brazil's sitting in their own impeachment story. Maybe they do better than we do in terms of impeaching our president. Russia, still a little bit of an oil problem there. And Turkey, kind of still embroiled in the entire Syrian story.
Putin was on telly last night, by the way, for about an hour. He had a phone in. He had a well-managed phone in, and he said everything's fine in Russia. I'm very optimistic about Russia. But don't forget the four that Jeleze just mentioned are coming off very, very low bases.
Well,
exactly. And this is just a relief rally.
Well, yes and no. I think there's nothing to do with your money these days. You know, you've got negative yields. I can't remember the number now, but there's a huge amount of bonds today.
There's more than $9 trillion worth of dollars, with negative yields more than $20 trillion almost, with yields less than 1%. And that's also why the gold counters have run, and the gold counters have run for a number of points, and we can get onto that a bit later on. But all of a sudden, this whole story of, do I need to put my money into a bank account where I'm going to earn negative interest rates, or am I actually happy paying a bit of a storage cost for gold? That whole argument has actually started to disappear as well. So it's a bit of opportunity cost that's aiding a little bit of the gold rally. But you're right in the sense of we are seeing those two movements of the long dollar position. That was kind of the world's most overcrowded trade from almost half of 2014 through 2015.
In other words, the euro dollar went from 145 to 105, and now it's just stabilising before the next leg down for the euro and the next leg up for the dollar. You look sceptical, Joanne.
Yeah, I spoke to JP Morgan yesterday. I had a really good presentation with them, and I said, why on earth if the ECB keeps printing money is the euro not weakening? And he said, because it's not going into circulation. So if you look at the deposits of the ECB, of money sitting there, the velocity of money's not moving around the economy. So while they're printing euros, it's not actually going into the real economy. So
where's it going?
Well, it's sitting at the ECB. No, but it's getting higher and higher and higher.
But that's similar to what happened to the Fed. If you look,
the Fed did spend that money because US banks, despite poorer earnings, are actually capitalized quite nicely. European banks still look like a complete mess to me. So I haven't seen a turnaround in those fortunes. But irrespective, there isn't a lot of euros.
It didn't go into the economy.
No, it hasn't gone.
Stopped at either the banks or.
Yeah, in the US, it's gone into the economy more than it's gone into Europe. So I mean, we're playing with
semantics.
Thank you very much. But I think back on your point about
always nice having Afrikaans person around.
Back to your point about emerging markets, I think there is an aspect of people talk about good stories in markets, and then they talk about the price of things. Mm-hmm. So right now, everyone's hated emerging markets forever because the fundamentals are so weak, right? Mm-hmm. You and I both know that. But how much of that's in the price? So there's an aspect of, and I hate this expression, margin of safety around certain emerging markets right now. And suddenly, if you look at liquidity flows, people are saying the S&P is frighteningly expensive from a price to sales ratio, from a liquidity ratio, whatever you want to look at, the S&P is expensive. But emerging markets, and I can't remember the stat exactly, so please forgive me here, but for the next 10 years, the emerging markets could outperform the S&P and we'd still be back to square one the last 10 years because emerging markets have been such a poor underperformer. So you've got a lot on your side, a lot of time on your side, and yes, fundamentals are poor. But,
you look quizzical.
No, I want to hear this. But but when central banks determine markets, how much do fundamentals really matter?
Okay, so there are so many points there, but let's go on the first couple.
You looked quizzical, and then
yes.
you started to smile.
Yes.
The 10-year story.
No, let's even take a step prior to that. And let's just look at flows into emerging markets. So what are the trends that we've seen since the start of this year? And you can actually just look at South Africa as well. It's just kind of a proxy for the rest of emerging markets. We saw outflows out of equities and inflows into our bond market. That's what we've seen over the last 3-4 months. And specifically into our bond funds or into our bond markets, we've seen almost 10 billion rands worth of inflows into our local bond market over the last 3 days. So is that a function...
From where?
Foreign investors, sorry.
Okay.
So is that a function of, like you said, it's becoming so cheap compared to international assets that global investors are looking at it and saying, on a relative scale, it's not that bad? Or is it a function of, again, people saying there's a bit more of a risk on environment because Janet Yellen / the Fed has said, hold on, maybe we're not going to raise interest rates as quickly as we thought we would be doing it. We're maybe not reversing this entire QE process as quickly as we said we would. Because if you think back, when did this whole long dollar story started? It started when the Fed said, we're now done with QE and we most probably will start raising rates. That's when the long dollar investment or basically plan actually came to the fore, which was, like I said, almost mid-2014. This thing is now slowly starting to unravel because the Fed is changing their tack. So that's kind of part, I think, of some of the underlying issues at play. Whether the emerging markets will outperform the S&P over the next 10 years, you'll be a better position than I am.
Can I talk about inflation? Do you mind? It's lovely
Please
hearing you both talk. It's the feast of reason and the flow of soul. I want to talk about inflation. Inflation in the States is starting to tick up, I think. And what we haven't seen yet is the impact of $27 oil going to $44 oil. And in the next 3 months, inflation may start to pick up, which means that Yellen has at last got a reason to raise interest rates. She didn't have a reason last time. There was no reason. It was just that she wanted to save face. Is there a reason now?
Are you asking?
I'm asking you.
Okay, I think it's absolutely fascinating. I'm so glad you brought this up. Markets have been on a tear, particularly US markets, and European markets do their own thing because they're very hard to understand these days. But take the American markets. They're all very, very, very bullish because Yellen has said, I won't raise rates, or I'll raise them gradually for years to come, okay? But you're absolutely right, Lindsay. If China starts recovering, inflation starts picking up, she's going to have no choice. The market is very vulnerable, if you ask me, to that environment, and yet no one seems to be picking up on it because today's story was very interesting. We had Chinese data came out in line with expectations, so GDP was in line, industrial production was better, retail salesman numbers were better, but oh my gosh, debt was enormous, but let's not go there right now. But the point is, Yellen's been saying, I can't raise rates because the global backdrop. She's going to struggle to argue against that right now. Okay, I can't raise rates because there's no inflation in the States. Well, we're practically at zero unemployment situation in the States today. So what's her excuse now? And will the markets change from central banks no longer protect markets to, okay, growth is so great, I'm all right. I don't know what you think.
So
but
America
I think we're at a point now where it's going to get very interesting because the markets have rallied massively.
America is saying it can't be the world's policeman anymore. We've heard about that because of the pressure to cut back on military spending and intervention. And now Yellen is saying basically we can't rescue the world economically as well. So there's going to be an island called the United States of America.
I think it's similar to whether Pravin Gordhan can actually do what he promised in the budget. There's a big difference between somebody saying something and talking a big story and actually doing that.
You mean they lie?
I mean that it's difficult to actually act on your policy. Whether they lie or not, it's not for me to say, but I'll only actually believe that she'll act on whatever she's saying if you can see the actions. And it's similar in South Africa, where the credit rating agencies are saying, you've got a lovely budget, we can kind of see what you guys are trying to do, but we first have to see that you can that you can actually act on it. Because right now politics are actually interfering with policies. And I think that's similar to what we're seeing in the States. Which is, again, similar to what we're seeing in Europe, which is a function of almost a more inward-looking or nationalistic drive. So whether you look at Donald Trump shooting to the head, to the fore from a Republican viewpoint, and it's all on the back of, we're going to make America great again. We're going to bring everything back. We're going to demolish trade agreements, etc., etc. It's all about the national, about the state. That's what's happening in the UK from a Brexit viewpoint. So can we see a recovery in the pound, for instance? Definitely, because like everything else, instruments and investments get oversold. So why did we see a bounce in emerging markets? I think, like I said earlier, it's because the base is so extremely low that it wasn't difficult to see a bounce. To see a bounce, but to see that bounce almost sustainable going through, you need to see the fundamentals coming through. And unfortunately, I didn't see that coming through.
Okay, I think that's really interesting because I, along with you, agree with fundamentals. But if you'd ignored fundamentals the last 7 years, you would have made an awesome amount of money. Because central banks seem to ignore fundamentals, and I think you would agree with me on that.
Unfortunately.
And let's take a classic example at the moment. The States, we've got earnings per share numbers coming through. And gosh, they beat them, because that's not surprising. They always beat them. But the numbers aren't good. Okay, regardless of the beat, because we know that the management teams put a number out there knowing they'll beat them. So let's not take that number terribly seriously. The numbers aren't good. And yet markets keep going higher because Yellen has underpinned the market by saying I won't raise rates. And I just worry at the moment that fundamentals have stopped being the all-consuming thing that we need to look at.
I hanker after the old days.
I do. I do hanker after the old days of central banks not
I hanker after the old days where every single word that people say is analysed. You have to have a meeting. It's there's cameras everywhere. Janet Yellen flags us as to what she's up to. FOMC minutes. We have trading updates from companies saying we reckon it's going to be 20 to 25% increase in earnings this year. And we get the other thing, which was go back to the days of, you wouldn't know this. You're both too young. But there used to be something called the Commitments of Traders Report, and it used to come out.
I definitely don't know what you're talking
about.
Well, what would happen was that the authorities in the United States of America, the futures markets authorities, would collate all the data, and they would say, well, Goldman Sachs is long of this, and JP Morgan is short of that, and it would be divided into big traders and small traders and speculators, and they would say how many positions these people had. It was called Commitments of Traders, and you used to look at this thing, analyse it, and you knew what was going to happen because you followed the big traders. Now it's delayed for 2 weeks. I don't know. I just think that. I like a surprise. I don't want a trading update. I want a company to come out and say, we've gone bust. I don't want to know beforehand so that there's more fun. And the over-analysis of the financial markets, which you two are part of course, is, to me, it's no fun.
I think this is really hard to discuss in this program, but I do think the central banks have changed the game somewhat. Fundamentals should be all-consuming. And they should be. It should be all you and I care about is fundamentals. All I'm trying to highlight is that if you'd looked at that for the last couple of years, you wouldn't have made money for your clients. I'm not saying it's not important going forward. I'm not saying commitment of traders and that sort of information is not important. I'm just highlighting that we still live in a world where central banks are absolutely, completely terrified of raising rates. We have now a thing called ZIRP in markets, which most people would understand to be zero interest rate policy. And a lot of us talked about this. In Europe today, if you want to put money in the bank... ZIRP. It's a lovely term.
Another acronym.
No, but I've explained it. It's zero interest rate.
Yeah, no, I'm just saying another acronym that I have to put into my little black book.
But that's what pensioners in Europe are dealing with. This is in time to come. We're going to go, what on earth were they doing? But they're trying to save the world. I mean, I cannot believe the IMF, Lagarde, saying that she was saying it works. It's not working. How do you force pensioners into scary assets? It really bothers me, and I think there's going to be a time, and we're going to look back and go, this is wrong. But we have to play this game, Lindsay. We have to invest clients' money. You and I both have to look at things and say, where do we make the best returns for our bucks? And right now, I don't know how you're feeling, we're not prepared to take a risk either way. So we're not going to bet the farm, and we're not going to say, let's take no risk because this game continues for a while, and let's not take all the risk because it could be really horrible. So we have to be very careful with clients' money.
Yeah, you do. After the break, we're going to have a look at the South African market and also pick up on what Joanne just said. Is the market going up because the people that really have a look at the fundamentals and say that the fundamentals are bad and have been left out of the market suddenly realise it's not about fundamentals, so they buy back in, and therefore the rally becomes self-perpetuating. Business FM will be back in a moment. Welcome back to Business FM. I'm Lindsay Williams in my radio studio, FM on 101.3 FM at the Artscape Theatre, and looking back at the week with me is Jeleze Hattingh from Element Investment Managers and also Joanne Baynham from Mitan, Optima. I said something before the break. I said it's all self-perpetuating, the rally. People that didn't get into the market and didn't participate in the last part of the rally because they didn't agree with the fundamentals are suddenly saying to themselves, I'm throwing in the towel. I'm now going to buy because the markets are almost at record highs. So they've sort of abandoned their principles, and Jeleze Hattingh was furious with that. Jeleze?
Yeah, I don't agree with it, or in the sense of I don't agree that that's a good plan. I think what we are seeing, you've got to ask yourself whether it's a relief rally and whether this bull market's going to continue, or whether it's a little bit just off what they call a bear market trap or bear trap, where the market rallies a little bit just before it continues to fall. Because we believe that this time is not different, regardless of whether you want to blame it on central banks or not. Every time there's going to be a different reason why it should be different. You go back to 2000, 2001, 2002, with all the tech stocks flying through the roof. You had to be in it, and people were throwing in the towel at the wrong time. And I think it's exactly the same what we're seeing at the moment. Yes, for the last 5 to 7 years, central banks have driven our market. Fundamentals, you could throw it out of the window. But where we are at this point, where there's a lot of turmoil, you look at the earnings numbers, and the reason why the earnings numbers continue to surprise to the upside is not because management actually guides it kind of pedestrian. It's because the analyst and the rest of the market downgrades their numbers through time, so that by the time the numbers come out, they're like, oh, we're surprised. Then you look at your earnings.
Company directors lie because the positive upside takes the share price higher.
Company directors lie, did you say?
I think they absolutely do, but let's not go there. I absolutely think they do.
I don't think that's a good career decision to say that, but
I'm talking about US.
Maybe qualify
Okay,
that.
let's do this. They're what's the word I'm looking for?
I think
they're not
they're
always
kind of
terribly truthful.
To the
they're
bottom
economical
of
with
the
the
truth. Thank you very much. That's the word I was looking for.
So that's the first part. Secondly, you look at your earnings per share, specifically in the States. What's been driving it? Share buybacks. That's basically the big thing. Can you actually build a sustainable economy and a sustainable market on share buybacks? No, you can do it for a period of time, and then it's going to fall over.
Can you explain share buybacks? Because does that mean that the company is shrinking?
Yes. No, it basically means that from a output viewpoint, the company still is exactly the same. But where previously they had 100 shares, they took their earnings and they said, where can we invest this better? Apologies. Can they actually invest this in their company, and they expand the company and they grow the economy? Or are they going to take the money and rather buy their own shares back? So now all of a sudden you don't have 100 shares, you only have 90 shares. So same earnings divided by less shares, and you look like a hero because you've got share growth or earnings growth. But meanwhile, the size of the company is they still deliver exactly what they did previously. They're not building the company, they're not building the economy, they're just massaging the numbers. So is it good for shareholders? One can argue, again, yes, it's not a bad thing for shareholders. But if that's the only thing driving your share growth, then obviously it's not sustainable. So it's back to, what is a sustainable growth number? Are we in a sustainable period? And I don't think so.
So how important then is the second quarter earnings season in the United States, which is upon us now? It kicked off this week with Alcoa. There's a few dribbling through. So if the numbers are as bad as people are saying, relatively bad, the worst since 2009 second quarter apparently, do people suddenly say, well, okay, central banks versus fundamentals, and then maybe the fundamentals start to come to the fore?
Well, it makes valuations more expensive. You can't argue against that. So if the earnings are weaker than expectations, the PE multiples look more expensive. And I think you and I would both agree, in certain markets, developed markets, they're not cheap. So it takes away that feeling of safety around those assets you're holding. Whether it causes markets to kind of fall, I'm not so sure. My concern right now is that you've had most asset managers selling for the last 11 weeks in the US. They've been selling every single week. You've got insiders, directors of companies selling. Just
clarify that. I think you sent me an email this week, and it was a stat from JP Morgan, I think it was.
Or Bank of Merrill Lynch, one of those.
Yeah, Bank of America Merrill Lynch, yeah. Yes. So institutional investors, big investors pulling out.
Have been pulling out for 11 weeks running. You've got insiders who've been selling for weeks now. The problem with that, however, is back to your comment about, do they all go, oh dear, whoops, we got it wrong, we better go chase this rally. So one would argue that that's a rational thing to do, but if they get it wrong too long, their clients say to them, but why are you underperforming an ETF I could have bought, or a passive fund, which is now everybody wants to buy passive funds. So those poor active managers go and buy that market they've been selling. So that could underpin the market to go higher, even though earnings per share are bad. So back to your point, because the big money has been selling for weeks now, and they are very underweight. There's a lot of pressure there. We'll see. I mean, this earnings story is going to be very interesting for me, because if it was all about fundamentals, if that's what drove markets, then markets should be falling. There's no doubt in my mind. Earnings per share are falling, and ultimately, if you look at earnings per share in the States, it leads ultimately to recession. Now, we're still not saying that's going to happen, but when you've had earnings this bad in the US, you lead to recession.
I think one of the difficulties as well is you look at one of the countries where we've seen this story before. So you look at Japan. Japan's tried quantitative easing in numerous ways. They've tried kind of central banking their way out of their problem for the last 20 years. The stats that are currently coming out, quite incidentally, I enjoy this one, is that the number of retirees that are now being caught for shoplifting because they actually want to be sent to jail is at the highest
What
ever.
did you say?
This is Japan.
The number of
Really?
people that are retired,
Yes.
i.e. 65 plus,
That are being
being
caught
arrested for shoplifting has risen.
because they want to go to jail.
Better food?
Better accommodation, and better medical aid than what they can get if they are on this little state pension where
That is
everything is
unbelievable.
extremely expensive, and their money, their little pension fund money, is now earning minus 11 basis points. So in other words, you're paying again to give money to the Japanese, basically to give money to the Japanese government. So it just doesn't make sense. So it's back to your point of zero interest rate policies, or rather negative interest
Don't
rate
try
policies.
this in South Africa, by the way.
Don't try it over here. So they're starting to see this overflux of retirees going into jails. But again, you think about it. We hear stories about the change or the shift in demographics, not only in Japan but also in the States. So all of these things point towards the central bankers throwing everything they've got at a problem. It's not working, but they don't have any other option. So they continue to throw the same thing at the same problem. Will we see a different outcome than what we're currently seeing in Japan? I don't know.
We have
I would love to say
very different
it should be
demographics
different.
in the US. To be fair, we do.
Yeah,
But I do agree with you. I think central banks are running out of road. I do. We need governments now to come up with new policies, and which is structural policies on labour policies. That's not happening. Take Europe, for instance, where they refuse to work a full week. They don't want to have their shopping centres open on Saturdays and Sundays, sort of example. That can't continue. You've got to change that. That's structural reforms. Central banks can't fix that. So I think they've tried their best. They've done a good job, relatively speaking. The stock markets have gone up massively. Ironically enough, what it's done
Polarisation of wealth.
No, thank you. You beat me to it, but that's, I think, is the biggest problem we're facing in the world today. And you talked about Trump earlier. I wrote a piece recently about Trump. Why is he so popular? He's so popular because the rich are so rich in America today, and the middle class have been obliterated. Whether it's healthcare costs or student loans, you name it, they've never been worse off.
Yeah, but
in the greatest bull market we've seen for a very long time. And you can see why, and that'll happen in Spain, it'll happen in lots of countries in the world. This polarization is a massive issue.
So again, the question is then, do you want to invest your money alongside the central banks who are trying to prop up the stock markets, or let's call it almost the financial instruments, but you're starting to get this global feeling of revolt from a income inequality viewpoint of people saying, but listen, hold on, it's 7 years later, like you said, the rich guys are richer, the banks flying, the stock market's awesome, but the poor people, it's actually not working. So you're starting to see a lot of political uncertainty, not only in South Africa, and we still actually have to touch on South Africa.
Yes, I'd like
but
to.
It's a global trend. Now, do you want to invest along with central banks saying, but hold on, through monetary policy and chucking money at this, we can fix it? Or do you rather want to say, I'm very scared of what I'm seeing around myself. The only thing that I can actually bank on is the fundamentals, or all the fundamentals behind it. So how do you actually invest
So it comes
then?
back to my argument of much earlier. Evaluations have to matter.
Yeah,
so if the valuations
agree.
are attractive enough, you can see why certain people are starting to look at emerging markets again.
Let's talk
Because there
about
are
the emerging
pockets-
market
there
that
are
we
pockets in
populate.
emerging markets that are offering you decent value.
Let's talk about South Africa now, because we've only got 3 or 4 minutes left. Your area of expertise, South Africa.
I think, obviously, the big story this week is just the level of the rand, of the currency. It's back to where it was prior to Nenigate or the shuffling of our finance ministers. And one can argue, well, is anything better? Is our inflation numbers better? No, definitely not. Our inflation is actually going to surprise to the upside even further. If you just look at the food inflation numbers, etc., that are coming through. Our unemployment numbers are worse. Our GDP numbers are worse. Everything's actually worse. But we're coming
and
off a
Julia
low
was
base.
saying to me, our great cameraman here, that since I've been with him, the bread price has gone up 3 times, and yet his salary hasn't gone up.
Yeah. And it's just going to
In
continue
real
to
terms.
it's going to continue to get worse and worse. But I think what has happened,
Sorry, I
fortunately,
just have to stop you there. I hate to interrupt you, but you say it's going to get worse and worse and worse.
Yes.
I think what people are now starting to price in, that maybe it doesn't get worse and worse and worse. And markets are all about anticipating the future. They're not about what we have historically. So right now, I would totally agree with you. South Africa is relatively a basket case. Things look terrible. But if we have a commodity cycle that appears to be bottoming, that China appears not to have fallen over completely, the rand continues to strengthen, we could have a situation, not in the next 3 months, but the next 12 months, South Africa starts turning around.
Okay. I want to qualify my getting worse and worse. I was talking about inflation numbers.
Yeah, but inflation will also be impacted by the rand. If the rand continues to strengthen, inflation here will come
lag
down.
effect, though. We've still got an effect. It's going to go to 7.5%. Is what I understand.
The pass-through from rand has been very diminished, or very very small actually over the last couple of years. And
we've talked an impact, and so do oil prices.
True, but we've talked about oil price, and it's currently again sitting. Let's play nice. 40 bucks a barrel. If that goes to 50 or 60, you even just have to look at the Reserve Bank's numbers. But the point behind it, there's nothing great over the last 3 months that could have justified this influx. But the thing that was great was actually what happened to the Guptas and the banks and the financial institutions standing up and saying, listen, guys, we're not standing for corruption. What's currently happening to Zuma, along with all the volatility behind it, it's an awesome thing. What's happening from a constitutional court verdict, it's a great thing. So it's a lot of news that can be perceived as negative, but that's actually underpinning almost a very solid base. And I think that's why we're starting to see the investors coming back. Apart from the fact that if you look at it on a relative scale, there's still value over here. There's an underpin of maybe our political situation is not that bad. There might be a lot of volatility in it, but it's not that bad because there are green shoots all along.
Okay, green shoots. You've got a minute and a bit. This half hour has flown by. Joanne, last word from you. Not your area of expertise, but you're a South African and you're in the financial services industry, a student of the markets. South Africa.
What I will say to your comment about Zuma and politics in this country is that the commodity super cycle was booming. No one would care about politics in South Africa because the economy would be flying. I think the reason the rand is strengthening is because people think the darkest days are over. I think politics here are interesting. It's not the reason the rand is strengthening.
Fair enough.
I said it was the last word, but you can have the last word.
Oh, that's great. I just want to say that our underwater hockey teams actually came first and second at the Worlds.
Yeah.
And the reason why I actually want to say that is back to this green shoots. And there are still good things. There's good things in this country. And we need to continue to actually look for that. And whether it's in a gold company, if you actually want to go into the fundamentals, and I'm happy to go into, but or whether it's actually looking just at the beauty that we've got, or actually there's a little bit of a stabilising.
We've got everything going for us. It's just that unfortunately, in a young democracy, we're messing it up a little bit here and there, and things.
But we can get through it.
Yeah.
I agree with Jeleze. I think the good news has got definitely improved lately. Yeah.
Thank you very much, you two. That's Jeleze Hattingh from Element Investment Managers and also Joanne Baynham from Mitan Optima. The Business FM show will be back same time next week.